All right, so let's start with the big story that we are tracking on WION at this hour. Now, if you are an investor, and especially in the United States of America, this is news that should seriously concern you. After the American regulators decided to pull the plug on the Silicon Valley Bank, Elon Musk has now made a statement that he is open to the idea of buying the collapsed Silicon Valley Bank and turning it into a digital bank. In a surprise collapse on Friday, the startup-focused lender SVB Financial Group became the greatest bank failure since the financial crisis that shook the world back in 2008, sending shockwaves through global markets and also leaving billions of assets of businesses and investors stranded. Authorities have seized the assets of the Silicon Valley Bank. The Federal Deposit Insurance Corporation has been called in to take over the institution and to handle the sale of its assets. The FDIC has said that all insured depositors at the Silicon Valley Bank will have full access to their insured savings as of Monday. And also the bank's main headquarters and all of its branches will reopen on Monday, but the FDIC has reported that as of the end of 2022, 89% of the bank's $175 billion in deposits is not insured.
That we will get access to the $250,000 on Monday. But after that, trying to get access to the remaining capital is going to take months. So the reality is we can't operate our business without accessing some capital. So our options are basically to go find debt until we can get access to this capital.
Now, the abrupt failure of the Silicon Valley Bank has shocked the startup community, which had grown to rely on the lender as a stable source of funding, especially for the most ambitious projects in the tech industry. It had in fact become the 16th largest U.S. bank by assets in the year 2022, and the bank had over $200 billion in terms of assets and approximately $175 billion in terms of deposits. Currently, the tech startups are facing some serious trouble when it comes to financing.
If you're a startup, cash is king. The cash and the workflow to be able to have runway is critical. And so access to the cash to be able to now pay your employees to actually cover the expenses you've got is the thing that I'm mostly worried about. It's just to make sure that we can do that. And so we'll figure out a way to bridge and manage that.
The collapse of the Silicon Valley Bank comes to the heels of the crypto-focused Silvergate Bank's shutdown. Silvergate marked the first U.S. bank casualty of FTX's collapse and the market rout that followed the news. Those woes were already reverberating across financial markets, in addition to the widespread worries about the Federal Reserve's plans. Now, the bigger worry is not just the risk of contagion globally from the Silicon Valley Bank's collapse, but also what the rising cost of money would actually do to other banks as well. The rapid escalation of the SVB's issues after the bank announced on Wednesday that it would raise money underscores as to have aggressive policy tightening by the Fed and other central banks to battle inflation is now revealing the serious inherent weakness in the market. U.S. Treasury Secretary Janet Yellen has called the SVB collapse as a matter of serious concern. The White House, however, has said that the banking system still remains pretty resilient and that the regulators have effective tools to address this type of an incident.
Mentioned Silicon Valley Bank. There are recent developments that concern a few banks that I'm monitoring very carefully. And when banks experience financial losses, it is and should be a matter of concern.
Our Secretary of the Treasury Secretary Yellen is closely tracking the developments with the Silicon Valley Bank. What I will emphasize as well is that our banking system is in a fundamentally different place than it was, a decade ago, and that the reforms that were put into place back then really provide the kind of resilience that we'd like to see. So we have every faith in our regulators.
Now, nearly half of the U.S. technology and healthcare companies that received funding last year were SVB's customers. The bank also had connections with leading tech companies such as Shopify and ZipRecruiter. U.S. banks have lost over $100 billion in terms of stock market valuation in just the last 2 days, with some European banks losing about $50 billion in terms of their valuation. Thus, SVB's fallout has also raised fears that more banks could actually face the same fate against the backdrop of high inflation and the ever-rising interest rates. WION is now available in your country. Download the app now and get all the news on the move.